I think that Bitcoin is going to grow to be digital gold, and it's going to grow larger than gold. And at some point, that will bring back price discovery to currencies, to bonds, to stocks, to monetary indexes, so that you can imagine there's $500 trillion worth of assets in the traditional system, and Bitcoin is irrelevant. And gold is not playing the role of enforcer of monetary discovery. It's not working. We're not on a gold standard. Gold is not going to be 20, 30% of the monetary energy. It's not replacing safe haven. Right. It's not replacing cash. It's not replacing bonds as a safe haven asset. Right. People are using Tesla as a safe haven asset, or it's a store of value right now. So gold doesn't work. The world needs a safe haven store of value that's sound money. As Bitcoin grows, it's not going to replace the currencies. It's going to be the central core. It's like granite bedrock. You're going to build New York City on granite. You're going to see Bitcoin become a 10 trillion or 20 or 30 or $50 trillion thing. People that were buying stock indexes as a store of value will say, I think Bitcoin's a better store of value. Instead of taking 15% in the S&P, why not take 200% in Bitcoin, or 100%? Bitcoin was 280%, right? And S&P is 15% in the last 12 months. Okay. So why in the world would I ever buy an S&P, a Spider index or Vanguard 500 index as a store of value? And the answer is people are afraid, fear, uncertainty, doubt, not, ignorant or fearful or something. So as we regularize or normalize Bitcoin as an asset class, I think that it's going to demonetize those indexes, and it's going to rob capital from bank accounts. I mean, who's going to put money in a savings account that yields 0% interest, right? It's already, Square and PayPal are already siphoning off money from a savings account, right? So what you're going to see there is Bitcoin becomes, people have talked about it. They're like, what is it? It keeps everybody else honest. It's like the sovereign enforcer of integrity in the world, right? What if there was one country that anybody could move to that was fair and equitable? Then if another country were to abuse your rights, you would presumably, blink and move to the fair and equitable country. Right. Well, we can't quite do that, but we've created a cryptocurrency in cyberspace, which is fair and equitable. And if you live in Venezuela or Nigeria or South Africa or Lebanon or Turkey or Argentina, you have the option to move your money. And it's pretty obvious, like it would be irresponsible to not. It's not a bubble, right? You wouldn't describe Bitcoin's appreciation against the Venezuelan bolivar as a bubble. You would describe it as rational capital flight as a currency collapses into another currency that's not collapsing. Right. So I think what'll happen is, as you see that flight, governments have to respond to that. As that starts to happen with the dollar and the euro, I think that people will realize that when price discovery returns, then interest rates will begin to matter again. Let's go back 5 years, right? What used to be the reason that a country wouldn't drop their interest rates to zero? Because if I drop my interest rates to zero, everybody attacks my currency and all the capital flows from the pound to the dollar, or it flows out of the euro, or it flows out of the Turkish lira, or it flows out of the whatever. And so your currency collapses. And so the check on irrational behavior is capital flow. And I think that what we're going to see here is we're going to see more, and the check on irrational asset pricing is capital flow. Why are stocks overvalued? Because people have no alternative. Why are bonds overvalued? Because people have no alternative. If there is an alternative, the capital is going to rationally flow to the technically superior asset. And it seems pretty clear, right? If I have something which is reliable, that's going to appreciate at 200% a year, that you can't inflate away, it seems technically superior to something which is yielding 1% interest that is being inflated. Second, if you knew every trade of Bitcoin since 2010 to today, how would that be a better indicator of the future if the future is based upon things that are changing? It's like, this is the thing I said to Keith McCullough. Keith wanted to like talk about quad models and correlating Bitcoin performance to the CPI and inflation and deflation, and he's crunching numbers. And just like the Fibonacci retracement is not going to determine the future of Bitcoin any more than the Fibonacci retracement is not determining the future of electricity, right? And inflation is not going to determine the future of running water. And if the economy stops inflating, or if the CPI goes up by 3 or goes down by 2, it is not going to stop a tidal wave from blowing into your beach. If you're standing on the beach and there's a tidal wave coming, the first order issue is that's a tidal wave. And you're going to tell me, well, in the last decade, all of our statistical models didn't predict a tidal wave, and or something. It's like, it's irrelevant because it's an engineering phenomena. So a trader that wants to preach to me about what they think should happen based upon 2017, in my opinion, is irrelevant, right? And let's come back to the key point. If 10 billionaires choose to buy $5 billion or $1 billion or $2 billion worth of Bitcoin each, all of your models are irrelevant. All of your history is irrelevant. It's like everything you think you know how things are going to work out. And like, how about all the statistics of New York City for the past decade? How relevant are they to predict what happens in New York City this month?
Right.
Not relevant at all.
Right.
So traders, I can't predict the future. The only way, trading is not a way to make money, by the way, in my opinion. The people that make all the money are people that predict the future. Henry Ford, right? John D. Rockefeller, right? Andrew Mellon. What did they do? They invented aluminum. They invented oil. They brought us cars. They brought us electricity. Andrew Carnegie brought us steel. Mark Zuckerberg, not studying some statistical model. How did he get rich? He kept Facebook stock. He didn't sell it.
Right.
Jeff Bezos, he kept his stock. So at the end of the day, none of this statistics matters. None of the trading matters. None of the volatility matters. These, people that are living in their little world, studying their Fibonacci retracements and preaching with like incredible conviction about the upcoming expected 60% retracement or 80% retracement, they're overlooking this fundamental issue, which is if Bitcoin is a digital monetary network, and if enough people with money and power decide to adopt it, it's going to go up and increase by a factor of 100 or 1,000, and there's nothing you can do to stop it. And its past is completely irrelevant to its future. Right? So looking back makes no sense. The only question you got to ask yourself, Laura, is, and here's the question you got to ask: how much Bitcoin is Square Cash going to sell in 2021 on the mobile app? That's the question.
Right.
How much is PayPal going to sell?
Yeah.
Because PayPal and Square are going to obliterate everybody else's opinion about what they think should happen. Right?
Yeah.
And so I think that too many people in this industry have been around too long, and they're captured by their past, and everybody wants to draw on their past because they own it.